Back in 1921, black families in Tulsa built something they were never supposed to: wealth, ownership, and legacy. Black Wall Street wasn't just a place. It was a mindset, a system, a blueprint. And even after they burned it down, the blueprint didn't die. We just stopped passing it on. But today we're picking it back up. There's a strategy wealthy families have used for generations to protect and pass down wealth. And it's time we start using it too. It's understanding the difference between a trust fund and a will, and knowing which one is better for our families. This one decision could change everything for your legacy. Middle, adjusted to feature your ebook. When it comes to securing the future of your family, two key tools often come up: trust funds and wills. While both are designed to distribute assets, they work very differently and offer distinct advantages. Knowing the difference can help you choose the best option for your family's future. A will is a legal document that outlines how your assets should be distributed after your death. It names an executor to carry out your wishes and provides instructions for passing down property. While this sounds straightforward, a will has significant drawbacks. The most notable issue with a will is probate. Probate is the court process that validates the will and distributes your assets. This process can be time-consuming, expensive, and public. Your estate could be tied up in court for months or even years. During that time, your heirs won't be able to access their inheritance, which can cause financial strain. In addition to delays, probate also comes with fees that can reduce the overall value of the estate. Legal costs and court fees are deducted from your assets, leaving less for your family. And because probate is a public process, anyone can see how much you owned and who inherited what, which could lead to unwanted scrutiny or disputes. This is where a trust fund becomes a more powerful tool for preserving and transferring wealth. Unlike a will, a trust doesn't require probate. Instead, assets are transferred directly to beneficiaries according to the terms of the trust. This means no court intervention, and the transfer happens quickly and privately. With a revocable living trust, you remain in control of your assets while you're alive. You can modify the trust at any time, but once you pass away, the assets are managed by a trustee and distributed according to your wishes. This bypasses the probate process, saving time and money. A trust also offers more flexibility in terms of how assets are distributed. For instance, you can set conditions on when and how your beneficiaries receive their inheritance. You could specify that your children only receive funds after completing their education or when they reach a certain age. This kind of control over wealth distribution isn't possible with a will. Trust funds also provide protection. Since a trust operates outside of the court system, it helps shield your assets from creditors or legal challenges. This can be particularly important if you're concerned about future financial disputes or lawsuits. A trust helps ensure that your wealth remains intact for future generations. Trusts are also ideal for families with members who have special needs. With a special needs trust, you can provide for a loved one without affecting their eligibility for government assistance. This is something that a will cannot do. And if you want to take it one step further, that's where an Irrevocable Life Insurance Trust, or ILIT, comes in. This tool takes your life insurance and turns it into a tax-free inheritance, protected from estate taxes, creditors, and probate. It's one of the most overlooked strategies families can use to quietly build generational wealth. That's exactly why I created my new ebook, The Family Wealth Trust Blueprint. Inside, I break down step-by-step how ILITs work, give you templates and trustee checklists, and show you how to set one up the right way. You'll learn the same strategies wealthy families have been using for decades, but written so everyday families can follow along. The link is in the description and pinned comment. Outro unchanged. They destroyed Black Wall Street trying to stop us from building wealth, but they couldn't kill the spirit. Now we've got tools they never told us about. The ILIT isn't just a financial strategy. It's a form of protection, power, and purpose. It's how we stop our kids from starting from zero. It's how we make sure the next generation inherits more than just memories. They inherit momentum. This is what generational wealth looks like when it's done with intention. structure, discipline, legacy. We're not waiting for permission, and we're not asking for a seat at the table. We're building our own with trust, insurance, and a long-term plan. Black Wall Street wasn't the end, it was the beginning. Let's finish what they started. If you found this information useful, make sure to like, comment, and subscribe for more videos that help you build and protect your legacy.